All right, today let's put the spotlight then on Filter Capital. It's a technology-focused investment firm that's run by former Warburg Pincus as well as multiple private equity executives. And they have made a final close of their first fund at 800 crore rupees. Joining in right now is Nitin Nayar. He's the co-founder and managing partner at Filter Capital. Nitin, thank you so much for taking time out and being with us on ET Now. So let's just talk about this latest fund, 800 crore rupees. Tell us a little bit more about who the LPs included and what exactly the outlook is for the fund.
Excellent. Thank you. Thank you very much for having me. Pleasure to be here. So Filter Capital is a growth stage investment firm targeting tech-led businesses in India. My partner Sumit Sinha and I have been evaluating opportunities within the technology space in India for well over a decade, and decided to get together and launch a fund of our own. And we look around us and we see that the impact that technology is having across the business and consumer ecosystem in India only continues to grow. So we're excited to put together our first fund and really leverage that opportunity on behalf of our investors. Our investors include large domestic institutional investors as well as overseas investors, both HNIs and family offices. Some of our largest investors include HDFC Fund of Funds and HDFC AMC, as well as SIDBI SRI Fund, Oyster Global, including family offices and HNIs such as Akash Prakash, the founder of Amansa Capital, DSP Family Office, as well as Harsh Jain, the founder of Dream11.
Okay, so essentially I understand that you guys act growth-based and growth stage companies. How much have you received from the domestic partners? How much is the rest coming in from the international investors?
Yes, about 60% of our funds raised and committed have been actually from domestic investors. Another 40% is from overseas investors.
All right, so it's essentially co-leading the Series B and the Series C rounds. That's what you guys are looking at. So what's the average check size? And can you give a sense as well as to what kind of entrepreneurs or business profile it is that you're really looking at within these companies?
No, absolutely happy to do so. So Sumit and I are really excited about the prospects for how technology could influence every industry in the country. And our backgrounds are as tech investors. So we spend a lot of time looking at IT services businesses, software businesses, consumer internet businesses, financial technology businesses. But what we're also finding is that if you're an entrepreneur in even a more traditional industry, maybe logistics, education, consumer, or retail, the question you're asking yourself today is, how do I use technology to stay one step ahead of both unorganized markets as well as organized incumbents? So the opportunity set for technology investors today to not just back traditional services and software companies, but also look at opportunities amongst the larger industrial base where we're finding technology-led businesses to also begin to scale. And you've seen it in the listed markets. India, for example, one of the largest logistics company in India, if not the largest, is Delivery, which in a way has kind of upended the entire logistics industry in India. We're going to see more and more of that play out in the coming decade. And as technology investors, that's what really excites us. And from a stage perspective, we mentioned that we're Series B and Series C investors. Ultimately, the view is that the venture capital industry in India actually over the last decade or so has really matured. You're seeing now entrepreneurs raise money, angel investors and early stage VCs. Similarly, the private equity industry and the public markets are also more welcoming of technology-led stories, but they tend to play in a much larger space when companies are looking to raise $50 to $100 million. We'd identified a space in the market when companies have graduated from early stage venture, but are not quite ready for large cap private equity or the public markets. Therein lies the opportunity for Filter Capital, in a way bridging the gap between early stage funding and late stage pre-IPO funding. That's the role for growth stage investors such as ourselves.
So if you had to narrow it down, Nitin, give us a sense of which are the sectors that are currently looking promising and what kind of opportunity really you're foreseeing.
Absolutely. Now, given that my partner Sumit and I are ex-private equity executives, we ask ourselves the question that whenever we invest in a company, who are we going to exit it to? We'll typically exit 5 to 7 years from now. We view private equity in the public markets to be the primary source of exit for us over the long run. As a result, we spend our time focusing on sectors where our ecosystem knows and understands. For example, IT services and enterprise software. They'll probably be 2/3 of our fund. The other 1/3 of our fund will be in more traditional industries where we're finding tech-led businesses, whether it's logistics or consumer or financial services. Do expect that enterprise, B2B, IT services and software story to be 2/3 of what we do. We've already invested in 4 companies, 2 software companies, 1 mobility company, and a logistics company. And so we're pretty excited about that enterprise software story coming out of India. And on top of that, in our pipeline, we're looking at several opportunities within technology services as well.
Okay, so out of the corpus that you have, how much have you invested so far? Can you walk us through some of the entities that you have invested in?
Yes, we've invested about 1/3 of the capital, around 225 crores across 4 companies, 2 software companies, 1 logistics company, and 1 mobility company. The software companies are, one is Capillary Technologies, which is a loyalty software provider, which actually started off building a great loyalty business in India, eventually migrated to regional markets, has now started winning large business opportunities in the US. We have our second software company, THB, which provides patient engagement software to large hospital chains and doctor engagement software to large pharma companies in India and regional markets. Bus ticketing and tracking platform, Cello. If any of your audience is Mumbai-based and takes the bus, they probably have seen that BST buses use the Cello technology stack, and bus riders use the Cello app to track the location of their buses and pay for bus tickets. We think it's a very interesting story in mobility. And lastly, e-commerce, last mile e-commerce logistics player, Loadshare Networks, which actually has a very strong presence in the east and the northeast of India. So our view is the future of e-commerce will come from tier 2 and tier 3 cities, and it will be logistics services providers like Loadshare that are well positioned to really help e-commerce companies scale in those parts of India.
Okay. Now, both of you have had nearly 2 decades of experience in the private equity investing space. How have you looked at the Indian tech-led growth story pan out so far? Where is it that you think that the major alpha really lies in terms of the businesses? Is it going to be pure tech businesses like IT, software, those that are really leveraging new age technologies? Where is it that you see leadership emerging?
We actually think the opportunity in India is just so tremendous that we're going to see opportunities across all of those categories. But I will say 2 things. The first is we tend to be very focused on stage. So, we're Series B and Series C investors. We're growth equity investors. We do not typically seed or Series A because we just don't really have that, that VC kind of mindset. We need to see data to arrive at a view on the potential of the business. And so that's typically why we get involved when companies are in $5 to $10 million of revenues or more. And we think there's a tremendous opportunity to help those companies get from $5 to $10 million of revenues to $50 to $100 million of revenues. And the other thing we focus very closely on is economics. And so to your point about what's happening in the tech-led space in India, we've seen a lot of disruption in the ecosystem, a lot of capital raised across so many different sectors, whether it's B2B or fintech or agri-tech, for that example. And I think the message that entrepreneurs are getting from investors right now is, okay, now you've reached a certain level of scale, but how do you become profitable? What is that path to profitability? So in our view, the opportunity within many of these categories is to really work with entrepreneurs and find those entrepreneurs. Can you build a sustainable business model out of a promising technology that has been developed? I think entrepreneurs who are able to figure that out across categories are going to see a wealth reception from the public markets as well as from large cap private investors. And to the extent we can help those companies kind of go on the journey, I think there's a tremendous opportunity for us as investors.
Sure. So if I could get in a sense from you as well, there have been a lot of new age tech companies that made their public market debuts. Some had a fairly bumpy journey post then sort of taking cognizance of profitability, have smoothened their ride on D Street. Can you give us a sense as to how you've read into how some of these businesses have performed? Have there been any examples maybe that have stood out to you? And how is it that you would be then looking at companies within this space when they make a public market listing?
Absolutely, you've hit the nail on the head, and this is not just a domestic phenomenon. I mean, if you look at the domestic data, just seeing, for example, just take one company, which is Zomato, which has just had a tremendous ride for the last 6 months since it's made announcements about its focus on profitability, unit economics, and the numbers there actually look really good. So congratulations to them for being able to pull that off. And you're beginning to see other players in the market really focus on that sort of path to profitability. And it's a global phenomenon. I think back in 2021, when interest rates were low, risk appetite was high, I think there was this growth at all costs mentality that had pervaded the ecosystem, and the public markets were very happy to evaluate such opportunities. But now I think the markets have kind of taken a step back and said, look, unless you're able to generate profitability, which if you were to look at public markets in India, I mean, over the last 20 years, they've always prized businesses that can generate PAT and businesses that can generate cash flow. And markets are trading at an all-time high, yet the tech sector is not, suggesting that the market is waiting for such companies to really demonstrate profitability. And if they can, they will be richly rewarded. Now, given our backgrounds as private equity investors, we tend to come into companies when the unit economics are emerging, but the businesses are profitable. But product market fit is there, but they're still fine-tuning some aspects around pricing, some aspects around costing and profitability. The macro is definitely there, but our view is, given our backgrounds, and we've taken companies public from our prior firms, we've sold businesses to other private equity firms. We understand what these companies need to demonstrate in order to be accepted by the broader and wider market. And that's how we can roll up our sleeves and help these companies really achieve that level of scale and profitability, so that the outcome is rewarding for everyone.
Okay, and given the fact that you're looking at big ticket investments now making a comeback in the year, how you're looking at other VCs and in terms of which sectors are looking up and coming? Is it going to be sustainability as a big focal point in the portfolio firms?
I think that there are a tremendous amount of opportunities for private investors in India, and interestingly, there are new pools of capital that are targeting those opportunities. For example, as you rightly point out, I mean, sustainability, green tech, we're seeing a lot of private market activity there, a lot of entrepreneurial activity there, and new investors coming in with a mandate to say that this is what our focus area is: green tech and climate. Gen AI, you're seeing so many domestic LLM models that are beginning to emerge, and VC investors are actively evaluating those opportunities. I think there are always going to be new areas of focus and interest. We've seen a lot of also, drone tech, defense tech players emerge. We've seen deep tech. That's all very interesting. And we follow those segments closely. As growth investors, we get excited when we begin to see business models begin to form around those promising technologies. So our view is, if it's deep tech or frontier tech, until we see that business model, it may be too early for us to invest, but we do track those sectors closely. For some of the areas that you mentioned, like green tech, et cetera, because they may be capital intensive, then there are other forms of capital that are probably going to be more suitable for them. I mean, ultimately, we've raised an 800 crore fund. We're writing 60 to 100 crore checks to companies. We find that that capital is better suited towards technology services businesses, enterprise software businesses, consumer brands, some opportunities within fintech is where we expect to be spending a lot of our time.
All right,
If you like this video, then like, share and subscribe to ET Now.